Is it really that simple for Bitcoin's price action? This month in September, we've seen almost 11% downside on the month, but we've actually recovered quite a considerable amount of that downside, now just minus 2% on the month. And we'll be talking about a lot of different metrics to better understand where Bitcoin is in its cycle, what to expect going forward, and of course, to look at the remaining quarter that we have laying ahead of us this 2024. So we'll be talking about that in a lot of detail, as well as giving some scenarios what to expect going forward for Bitcoin's price action. So let's dive right into the video. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. And is it really that simple? It actually comes down to the fact that maybe it really is, because we are currently 2% down on the month, and really we need to close at break even for Bitcoin to preserve what has historically been a point of rejection in previous bull market peaking zones. Now this same area is acting as a historical support for the past 6 months. So we are down 2%, but we need to monthly close at break even roughly to preserve this area as a support, because we've seen loads of downside wicking opportunities below here, but we may be seeing a diamond shaped reversal form here, lower lows and then higher lows, essentially forming a diamond like reversal here. So if we do close at break even, we will have preserved this area as support. But here's an alternative solution to that, because we do need to rally an extra almost 3% to recover the range low of the overall post-halving reaccumulation range. The range low of this reaccumulation range is 60,600, and reclaiming that would be quite important to essentially resynchronizing with historical price tendencies, where we tend to see essentially reaccumulation in the post-halving period. But more on that in a second, because at the moment, September is seeing price action downside deviate below this historical support region. And the fact of the matter is that we could see a fake breakdown month right now, because if we look at previous Octobers, then October is a really strong month. We tend to see a lot of upside in October. So even if we were to monthly close below here, even though we're very close to actually reclaiming this region, but let's say we monthly close below here, if we just look at this Q4 return here, historical return and monthly average returns for October, November, and December, you can see that at worst we could see 3%, minus 13%. These figures have occurred in 2014 and 2018 respectively. Those are bear market figures, so we're not really going to see that sort of downside in this upcoming October. In fact, we're probably going to see upside in October. We just simply tend to see a strong October across time, and whatever the strong October is, whether it's going to be 33%, 60%, 47, 10, 39, 5 even though 5% is from 2022, which is a bear market year once again. It all just comes down to the fact that we're going to have a strong October, and any sort of upside like this is going to get us back into the range. So if we talk about this range in a bit more detail, through the lens of this historical demand area, which has been supporting price for the past 6 months, maybe even slowly 7 months if we reclaim it quite shortly, you can see that a strong month of October, which is what we tend to typically see, that would get us back into not only this reaccumulation range, but really getting us towards this area of resistance at 67.5K. And that's quite an important rally. 14%, how likely is that in October? If you look at previous halving years, 2016, for example, 14% is what we've seen in the past in a halving year. And then we saw 5% in November, and then 30% in December. So 14%, if we look at all Octobers, 14% is only, it's actually a typically weak monthly average return, only better than 5%, which was in a bear market. I don't expect us to have a negative month, nor do I expect us to have a single digit upside month. I expect us to have a double digit upside month, and 10% in a pre-halving year. I think it's better to be focusing on the halving years because we tend to see double digit upside in halving years 14% and 27% respectively in 2016 and 2020. So 14% would get us to 67.5k, get us into this resistance here. It would be really interesting to see how price upside wicks beyond here. We've seen loads of upside wicks beyond this resistance here. So essentially for an entire quarter, we were essentially upside wicking beyond the 67.5k resistance. But if we do rally like this, and 14% isn't really a strong return in October, that would invalidate this series of lower highs that we've been seeing since really mid-March. So we'd break that downtrend, and that's what 14% would achieve for us. It would break that downtrend. But if we were to look at 2020 returns for October, 27.5%, then that would actually get us to new all-time highs. So it just goes to show that rallying from here, 27%, should we indeed monthly close here in September, that would get us into really nice, comfortable territory into the parabolic phase of the cycle, breaking this resistance of 72k roughly speaking, and it will get us to 75k. And so if we look at 14% upside and 27% upside, we tend to see that historically we can even have higher upside than that. Rarely do we fall below or within that range really. So 27%, 14%, 10%, those are on the lower end in terms of returns for the month of October. And it just goes to show that we don't need to have a very, very strong month in October to really get us in pole position for bullish price position within and returning back into this reaccumulation range. So we only need a weak month in October, relatively, to see a drastic change in this current price positioning for Bitcoin. And it would get us back into this reaccumulation range. And if you look at previous downside deviations from this range low, these orange circles just showcase to us that these have been bargain buying opportunities, and we're just below the range low right now, still experiencing a downside deviation moment, but we've seen many downside deviation moments throughout this cycle in 2023 as well as 2024. So we're currently in this reaccumulation phase. We're experiencing a typically down month for September, but it's never really going to be single digit, or at least deep double digit downside. We're seeing single digit downside usually. We saw 10% in this September, having recovered to 2% downside, which is already pretty good for what has historically been a pretty single digit downside month, going into 7%, 5%. Of course, we still have a whole entire month to go, half of the month of September, but generally this is what we can expect in terms of downside. We've seen a lot of that downside already occur, and that downside isn't that significant because whatever strong October we have, even if we have a weak October of 14%, 10%, that still gets us right back into this reaccumulation range, which is exactly what we need. But more importantly, it gets us to break this downtrend that we've been forming since mid-March. So 14% a weak October would really satisfy a lot of those criteria. And 27%, well, of course, that would get us into a breakout moment, into new all-time highs and beyond. And if we look at history suggests to us that we tend to break out from this reaccumulation range 160 days after the halving. And so that gets us into very, very late September, early October. And so you can just see from 2020, 160 days after the halving is where we saw price break out into the post-halving parabolic phase of the cycle, and we may very well be on the cusp of that parabolic phase if history indeed repeats, because we are only some 2 weeks away from that breakout moment. And at this same point in the cycle in 2020, we were consolidating around the range low of the reaccumulation range, or at least the range low of that second reaccumulation range. Generally, this was one reaccumulation phase divided into two ranges, and in this moment in the cycle, we're very close to that range low, but still trying to reclaim it. So we still have 2 weeks to resynchronize properly with these historical cycles, and Bitcoin is very close to doing that, and the chances are in Bitcoin's favor that we'll be able to break back into this reaccumulation range, because the chances for a double digit downside or single digit downside in the halving year is quite unlikely, because in halving years we tend to see 3 straight quarters of upside across October, November, December, and we tend to see double-digit upside in October in of themselves, and not much is needed to get us back into this reaccumulation range. So a relatively weak month of October where we see 14% upside, that's still going to satisfy a lot of bullish criteria for price action. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.